Let's take a look at how the local market is trading today. As we can see, falling in line with global bourses. The concern, of course, is all around what is going to happen to Greece and if it will in fact default. Is it time to panic at this stage?
Sure, it's certainly time to take, cognizance of the fact that the European zone is certainly in lots of problems at the moment. Panic, I don't know, I don't think so. We've seen a nice little uptick since this morning's down spiral from the euro, so perhaps something coming off there, perhaps some kind of, resolution coming out of Greece in terms of the cabinet reshuffle or anything that's happening there on the political side. But certainly, the whole threat of contagion now happening towards to Spain or Italy or Portugal, who are also ailing at the moment. So I think, it's just a stark reminder that the fact that the European zone is definitely struggling at the moment.
Is there a concern, though, that we could have another stock market crash and we could have another Lehman Brothers crisis? Or is this something that we're prepared for now, almost 3 years down the line?
I think, the hope is that it's contained to Europe and that it can be resolved. I think in all the times that we've seen these kind of threats come through in the market, where Greece or Portugal or Spain default or there's threat of default, there has been aid lent to that country. So they have been managed to avoid it. There's also the QE2 measures that have been put into the United States. So I think central banks trying really hard to make sure that there's defaults do not occur, but the threat of default is what the markets are really reacting to, and what is making us stand up and be aware.
And you can see those Greek yields, 2-year yields, spiked around 30%. So just a sign of that fear in the market. Let's just take a look at our local market now. As you say, off our earlier lows, some stocks that are backing the trend, though. Copper miner Metorex saying that it's received an alternative bid from another party. It hasn't had a firm intention to buy, but it looks like this company is in demand. Vale bidding around $1.1 billion for the miner. Market taken well to this news.
Yeah, the stock was up just about 4% or somewhere near the 4% range. And I think, the management has also kind of been a little bit iffy about the Vale offer and perhaps encouraging other players to come forward and make a bid for the company. So it hasn't been disclosed yet who the new interested party is. However, there is speculation that it could be coming from China, a Chinese company there could be interested. However, we're all just trading on speculation at the moment. There's still some conditions to be made before a firm offer of intention from this new party, can be taken into account. So I think it's still early days there, but it's interesting that now they've got a new offer on the table.
The National Union of Mine Workers are recently coming out saying that they're going to be opposing any bid by Vale because of the issues around trade unions and the fact that it's said to be anti-unionist. But we'll see how that plays out in the Competition Commission findings. Now, just moving on to the retail sector, Pick n Pay up slightly today, has been a laggard in the sector. Any news around this stock that could have sent it higher?
Yeah, Pick n Pay has been a very big laggard in its sector, and I think, there's some renewed interest from deep value or contrarian traders or buyers, and I think that's why they perhaps believe that there is a turnaround in the stock happening. Earlier on in the week, they had their AGM where there was some hopeful sentiment or comments out of management there, where they're saying that they're benefiting a little bit from increased prices. So that's inflation. Their margins, they've also benefited from increased margins. However, their cost base is still a bit of their problem, and their distribution channel is a bit of a problem. So I think some players looking at that saying, okay, look, maybe it's time to get involved in Pick n Pay. The worst may be over, but also not a very good day for Pick n Pay as it leaves the top 40 of the JSE, and we welcome a soar into the JSE with a 31 billion market cap, and Pick n Pay with 19 billion market cap now leaves the top 40. So a bittersweet day. They're up, after a horrendous trading period for the past month or so. And for the day, but they also leave the JSE, the top 40.
Interesting to see if they'll manage to get back on that anytime soon. Moving on to the banking.
Yes, they have been.
Moving on to the banking sector, Able sitting at the top of the top 40, rallying up 1% today. A positive sentiment really around the oversubscription or subscription to that $300 million bond. Anything else around that stock?
Yeah, the 300 million 5-year bond, I think, there was the first time they issued a dollar-denominated bond, and it was well received. I think some market players perhaps liking that. They're going to obviously add that to their books and lend some money out there and increase their business. But they've also had a very terrible trading period for the past week. They went ex-div on Monday with about 85 cents, which is quite big for that kind of stock. So I think it's just a recovery, players getting involved back again at these low levels. So bargain hunting is what we're seeing there.
The bank is currently sitting at around R3.50 a stock. Is this a stock that you'll be getting into at this stage? Do you like Able over banks like Capitec, I suppose?
I think I prefer the business model of Capitec, but look, with the target market that they're looking at, I think you would get involved. If you compare them to the general banks index, they have been performing very much in line with the banks index, and so it's not a bad stock. But if you're going to be looking for a bank that targets lower LSM and looks at mass market debt or loan financing, then I would more likely go to Capitec than Able, but it's still a very good share.
Your thoughts on how we see trade panning out today, given the risk aversion in the market, but the fact that we have seen a reversal in the euro dollar now. The dollar is weakening slightly, but above that 142 level to the euro. We see the rand now trending slightly high against the dollar. It hit a low of R6.90. What type of market sentiment do you see playing out today in South Africa on the back of these developments in the risk environment?
Well, you must remember that a lot of players, I think, took the long weekend off, so we're expecting very thin volumes, whether it's on the JSE or it's on the currency market. So a lot of players are not in the office today. Also, there's not much economic data coming out internationally. The US is pretty quiet today, just some confidence data coming out later. So nothing really to spur on the market. I think what we will really be looking at is Greece and what pans out there in terms of the economic as well as the political side of things, with the cabinet reshuffle, who is in, who is out, who's the new Minister of Finance, and that kind of thing is what we're really looking for. But I think the expectation is for a subdued, but obviously in the negative side for the market for the rest of the day.